I'm Matt Bichard with REIT.com here in Chicago for the Real Estate Research Conference and REITWeek 2013. Joining me is Jacques Gordon, Global Strategist with LaSalle Investment Management. Thank you for joining us today.
Sure thing, Matt.
I'd like to start by talking a little bit about the BRIC countries, Brazil, Russia, India, and China, as emerging and developing markets, and how stable and sophisticated you see those countries, and specifically their commercial real estate markets.
Well, each one is quite different. They do share this characteristic of higher growth rates and massive urbanization, but after that it gets very different. And I guess to cut to the chase, some of them, India and China, have cities that have been around for 500, 1,000 years. And so you think about stability, well, they've got that. On the other hand, they don't have modern real estate or infrastructure in many parts of those countries, particularly Brazil and India. China does, Russia to some extent does. So I think when things about stability, there are aspects of each of those countries that are very stable, and then when it comes to commercial real estate markets, there are a lot of examples where things are moving much faster than what we're used to in the US. The cycle of both supply and demand can be faster, so there's a lot of contrasts out there.
And are there any other countries you would point to really as up-and-comers?
Well, yes, I think the idea of the BRIC acronym is almost coming up on 15, 16 years old now, and there's lots of other interesting countries that are sort of either frontier markets, beyond emerging, if you will, and those are often in places like Africa. In terms of just massive size of cities, Lagos comes to mind as the world's largest city. But when it comes to real estate investing, I would say it'd be more like Turkey, Poland. Those are the up-and-comers in terms of that part of the world. When it comes to Latin America, it would be Colombia. And when it comes to Asia Pacific, it would probably be a toss-up between Malaysia and Indonesia.
And sticking on Asia Pacific, it seems like we've heard a lot of news percolating about the REITs in Asia. Any insight into what's kind of driving this rise?
Well, and of course, back to this idea of heterogeneity, the REITs in Asia are not one kind of REIT. And so the J-REITs are doing an awful lot of activity now, driven by government stimulus programs that actually has the Bank of Japan buying their shares at various times. There's a lot of IPO activity in the region, but it's different depending on whether it's a Sing REIT, a J REIT, or a Hong Kong property company, or a Shanghai listed property company. So there's a lot of movement in all four of those major markets. There are smaller markets in addition, but I'd say the common theme there is really a lot of capital flowing in, a lot of development, and a lot of asset price appreciation.
Great. Jacques, thank you so much for joining us today.
Good.
For more on this and other REIT news and analysis, be sure to visit REIT.com.